So having said that, we've got some really exciting stuff to go over tonight. I'm going to kind of give you the topics in reversed order, and we're going to save the best for last. One of the things that we're going to do tonight is I'm really excited to bring this up. Actually, we've been talking about AI, and we've been talking about like how we can leverage trading and leverage day traders using AI platforms. And I'm excited to actually share that with you today. One of the things we're going to go over while we are doing this webinar at the end is I'm actually going to bring up some of the topics and show you how powerful this tool is when we leverage it. So just to kind of give you a sneak peek, when we're done at the end, one of the things I promise that we'll give you is how to use our AI tool that's free, open to the public, on how to use the VIX to buy or short the market. And it's going to, as you can see in the goal here, create a basic strategy around when to buy and short using the VIX. And why is that valuable? Well, I'll talk about it a little bit later, but it's so valuable when you have this fear in the market. And it's like, when's a good time to buy? When's a good time to sell? And there's actually some brilliant strategies that some of the richest people and people who've grown small accounts into enormous accounts have used trading and using a strategy around the VIX. And so this is just such a phenomenal tool, guys, to help catapult your trading to the next level, even from an educational standpoint, even just to do research for you. So really excited about that. One of the first things we're going to go over tonight is I'm actually going to go over three ways to help preserve your wealth, to make money, and the likelihood that we're going into a recession. So to say that again, we're going to go over 3 ways to help preserve your wealth or help you make money and the likelihood that we're going into a recession. And guys, it's not looking great. We keep getting more data that keeps solidifying that things are not going to be getting better. They're going to be getting worse. And the first one I want to talk to you about is debt. Obviously, our country's not in a great place right now, and we keep talking about this debt ceiling that's getting pushed off. Do I personally believe that we are not going to raise the debt ceiling? No, we will come to a conclusion. It has to happen. There's no way that we're going to avoid that. But there are some things that you can do, the average American, to make sure that at least the money in your bank account doesn't get sucked from you, and or there's actually some things that you can do to leverage it and to make it larger, make it work for you. So I'm just going to bring this up really quick. And I want to just show you this article that I found, because I think this is showing a time in our history that shows that in my opinion, there's no way that we're not heading into a recession. And I could be wrong. There could be some miracle in AI. That's the only thing I could actually see us getting out of this mess. But we just hit nearly 1 trillion and counting in US households are drowning in credit card debt. 1 trillion. And one of the things that I saw that was fascinating about this article is the ballooning in household debt. What we saw during 2008 to current. So there's this time frame from 2008 to current where, there's lots of stimulus added. We saw rates drop, and you would have thought that the average American's wealth would have grown. And what we actually saw was the opposite. We saw that the 1% of the richest people are owning more of the general wealth. In fact, it's almost up, or it's around 30% now. And so a lot of you might get discouraged around that. A lot of you might go, well, gosh, well, it's just hopeless then. The middle class are getting weeded out. There's nothing that I can do. Or like me and a lot of my friends and our followers, you can decide today that you're going to learn how to become one of those 1%. And that's what I would do. But in order to do that, guys, we've got to find ways to get out of debt. And the debt I'm talking about is the credit card debt. So if you have credit card debt, if you have non-secured debt or debt that's connected to you as a person, and I would say most Americans have never even had debt that's not tied to them, meaning debt that's unsecured and not personally guaranteed. It's very rare that the middle class or lower class even has access to that kind of debt, right? Unless you're like leveraging something at the pawn shop, usually the debt that you have is is collateralized in the case of a pawn shop, or you're personally guaranteed on it, right? It's going to hurt your credit. And so in that case, we've got to start figuring out ways to do that. And the data shows the difference between the people who step in and start leveraging themselves as the vehicle to get out of this debt and become one of the 1% and the other. And I would say the number one difference between those who decide to make this change, those who decide to step in, and those who decide to get left behind is how you handle your debt first. So for those of you who are struggling in debt, or your debt is growing, which it just is going to, right? Interest rates are rising. And so whatever your existing credit rate was back a year ago, 2 years ago, it's growing. And now the rate at which your interest is impacting your total principal is just skyrocketing. You got to get out of this. And so how do you do it? Well, we've got to wake up out of this resignation. There's so many people that I wake up, talk to, and they're in kind of this resignation that we're going to get more stimulus checks from the government, or that we're going to get more bailouts, or somehow, some way, it all will be forgiven, and I'll be able to turn a new tide, or a new chapter in my book, and be forgiven of everything that's happened in the past. And that's just not what's going to happen. This has happened, guys, for centuries. And the way you have to get out of it is you've got to step it up. And I know that sounds uncomfortable, and actually most of you have not been trained to do this, but side gigs will be the number one way to get out of this monetary suppression, being part of the 99%, even if we were in good times. Unfortunately, when times were good, you guys weren't looking, right? People were not looking for a side gig. They were not looking for a way to make extra income. And so if anyone has any great ideas of like potential side gigs or things that they found that actually make real money in the market for our group and our community, please add those things in the chat below on our YouTube video. The rest of the community would love to hear what you're doing to make extra money on the side. And let's just help each other get out of that, because that's the number one thing we want to take care of. Then once we're out of debt and we don't have these issues, then we can start talking about these other things like investing. We can start talking about how to leverage our cash and how to make more money off of the information that's here. But I want to service both. I want to help you guys with both your current financial situation, but also once we've got it there and I start saving some, then I have money now to invest. I think it was Grant Cardone actually who said that he lives on no more than a third, or he recommends that people don't live on more than a third of their income. And then the 2/3 they have, they can invest. And imagine what your life would look different if you had started living that way from the beginning, that a third of your income was for your living, for your house, your food, transportation, and the other 2/3 you just constantly committed into investing. Even if it was just bonds, even if it was just something silly, like how different would your life look? So that's the first one. Now we're going to start getting into the investing side. Second one, buy long-term government debt. So for those of you who have money and you're looking for ways to protect the existing money that you have, I've been telling my friends this since the beginning of the year, that bonds, treasury notes is the way to go when we're starting to plateau into a recession. And here's the reason why. We've got to talk about this, because I don't think most people understand, like, why in the world would you buy government debt right now? It makes no sense. Well, the reason is because of this. Let me show you this chart. This is going to make so much sense after you guys see this. This is a basic chart that shows, or a basic idea of how bond prices and interest rates generally move in opposite directions. And when I say generally, it's like historically, you can go back, guys, and see the correlation. It is just completely inverse. And so let's just explain what happens. When bond prices rise, generally it happens as interest rates fall. So what's happened to bond prices? Well, as we did all this QE all the way from 2008 to current, 2020, interest rates dropped, got lower, right? Historically low even. And what happened in turn to bond prices? Well, they dropped, right? Like the cost to get into a bond because as the interest rate fell, the bond price started to go up from down as the interest rate started to rise. And so the correlation is completely inverse. You don't want to be buying bonds when interest rates are starting to fall. You want to be timing when they start to come into the fall, but then continue. You want to be in the front of this wave. So if you are, this is kind of an inverse. We're kind of looking at this backwards. If I could flip it, that's kind of where we're at now, right? Interest rates are high. We're kind of over here on the right. And bond prices, typically as interest rates rise, bond prices are falling. That's what's happened. If you look at the bond market, prices have been falling. But if you could time when interest rates stop going up, which, by the way, I heard an interview by Randall Quarles last week where he said, this may be the last rate hike. There's the possibility that we might see one more. The market is pricing in maybe one more rate hike right now. If that's it, we're in the perfect opportunity to get into this wave and to have bond prices rise. So if we're saying interest rates aren't going to go any higher, buying bonds would be a potential gain. And here's a really unique correlation. As bond prices or as interest rates go down, typically the correlation is like a 1 to 10. So for every 1% that we see in interest rates fall, we generally see a 9 to 10% increase in the price of bonds. So could that take a year? Could that take 2 years? Yes. But the longer term the bond is, typically the better. And people are going to want these. They're going to want these long term. Why? Because the bond price that they're going to get a year from now or 2 years is generally going to be a lot lower. And so the return on the bond is going to be a lot lower. And so they're going to be harder to come by. It's really simple to see. So you get a premium for buying at the right time. Now, I'm not saying this is going to happen. And this is only one consideration, right? If you live in the country where your bond is issued, you're going to have a sense, for our national listeners, you're going to have a sense of like how solvent is your currency. And so currency confidence is essential. If you don't have currency confidence, then you don't want to be buying those bonds, right? There's certain countries right now also that I think we're going to see higher interest rates over the next 6 months to a year. And so that this would not be a good time for this. So just keep an eye, guys, we're right in this kind of turn that's happening in the market. And I think with the political pressure of the next election, we're likely going to see some stagnation in rates as long as inflation stays tamed, as long as we can keep inflation tamed. And I would say based on the recession data that we're getting, that's likely going to happen. So keep an eye on bonds. We're coming into that opportune market. Are you going to get rich off of something like this? Are you going to see like 2,000% return? No, this is like a way to preserve wealth. This is a way to not have your money in maybe high risk stocks or growth stocks that may be doing really bad over the next 6 months to a year. And this is a way to preserve your cash and maybe make a little bit of interest along the way, or you would definitely make some interest along the way. All right, let's talk about this. So lastly, so we've talked about debt. We've talked about buying long-term government debt. The third is to build a strategy to be ready to buy into risk stocks. So get a strategy ready so that if and when, well, I don't even say if, like it's really when you want to start getting into risk stocks. And so what would you look at? What type of risk stocks are we talking about? Well, you're looking at stocks and companies that have, really strong PE ratios. You're going to be looking at stocks or companies that maybe are really in high demand, but are really high also on the fulfillment side, meaning they have tons of people, tons of expenses that are likely going to be impacted positively by AI, meaning their stock price will be impacted positively from AI because their jobs, these service jobs and these repetitious jobs are likely going to be replaced by the automation, this automation intelligence, this artificial intelligence, right? And I would be looking at those type of companies, but I'd also be looking at companies that have lots of cash and cash reserves, because right now is the game of runway. Like how much runway do you have to take off? And the heavier your plane, the more runway you need. Cash is the runway for these companies. And so unfortunately, guys, growth stocks that do not have cash, stocks that are not making net revenue, these are going to be highly unattractive as we head into a recession. And so you want to build a strategy around that. So I'm not going to just leave you high and dry. Matt comes here to fulfill. So I want to talk to you really quick about a strategy that I got turned on to by one of my favorite gurus, and his name is Sirmoth. Let me bring this up just really quick. I think you guys will appreciate this. Let's see. All right, so I'm back on here. I want to talk to you about Sirmoth. So before I dive into Sirmoth's strategy, and I follow him, I listen to him on his podcast. He actually tipped on his last podcast last Friday about something that I thought was pretty revealing. But just look him up. Sirmoth net worth. You can see at around 2022, he's got about $520 million net worth, which is a 2,000% return on his 25 million initial investment. So does this guy know how to trade? Yeah. Is this someone I would be watching really close for how he's doing it, yes. In fact, I would even say more so than Warren Buffett, because he's kind of the Warren Buffett of the new age, where a lot of Warren Buffett's strategies were very consistent and concise and got him rich a long time ago. Those type of strategies will still work, but may take a lot longer to get the type of growth that might be really attractive. And so Sirmoth definitely had this figured out. Well, one of the things he said on his podcast, and I'll go ahead and show this to you. He's one of 4 members of the All In podcast. I know I'm doing a huge plug for them. I'm not getting paid for this, although maybe they'll throw in a free ticket for me or something for doing this. But they've got a summit I'm dying to go to. I'm planning on being there. But these guys, Sirmoth in particular, has such an eye on how to invest, and he's so good at it. And one of the things he said on this podcast is he's going to be looking a lot at risk strategies, like buying risk assets. And so I did some research. I was like, well, that's interesting. I bet you there's something online that tells me what his strategy was. So I spent hours, and I'm going to tie this into AI in just a minute, but I spent hours looking. What is Sirmoth's strategy? And I found it. And if you guys go to medium.datadriveninvestors.com, you'll find the same article. And this is the Sirmoth strategy during inflation. How do you make money during inflation? And he actually talks about the VIX. And so Sirmoth came up with this idea. You can say it is systematically true that when the VIX is in the teens, you sell or short stocks. And when the VIX is in the 30s, you buy equities because you think it's the bottom. If you've been doing that for the past year, you would have made a ton of money. And this was a podcast that he actually put out in August last year. And so what did he say? Teens, when it's in the teens, you sell or short. When it's in the 30s, you buy, because the VIX is like this emotional indicator. It helps you see the fear that's in the market. So what did I do? I thought, well, that's interesting. I spent hours doing this. I wonder if my AI would have gave me the same advice. And so without even, and by the way, if you want to use our AI, I'm just going to do a plug here for AI. Go to GreenChart.com. So if you want to use this AI, it's completely free. Go to GreenChart.com. You click on the day trade AI button. It will launch this. It will actually let you launch your first one without any interruption. But about, I think it's like a minute or 2 minutes in, it's going to ask for your information. Don't be hesitant, guys. We are not blasting people for this. We're just trying to create a barrier so that we don't have a bunch of bots and stuff hitting this. But this brings you to our prototype of our AI. And it's brilliant. Even in its state right now, if I had just gone to this rather than going online, it's like I should know better, right? It's like... It's like I'll take you to the well, but I forget to go to the well sometimes, right? But anyways, I did the same thing, and I went in and I asked it the same question. I didn't ask it about Sirmoth's strategy, although maybe we'll do that this afternoon. We'll go into that. But what I did ask it was to create a strategy, and let me show you this. I asked it how to use the VIX to buy or short the market. And then I said, create a basic strategy around when to buy and short the market using the VIX. And I hit deploy. So I'm going to deploy this. And then as I'm deploying it, I'm going to explain this, this AI prototype to you, because there's a lot of little settings, and I've had some of my most sophisticated technology officers, like even CTOs, that kind of got lost in this because their AI is just moving so fast, and I just assume everyone's kind of there and kind of moving with it, but I'm not going to assume that this time. So again, you go to greenchart.com, guys, day trade AI, it will take you to this page, and we're going to deploy this, and I'm going to tell you what's happening as we deploy this. So the moment you hit run, the transformer begins, and this is a very unique transformer that actually it bridges and grows horizontally rather than vertically, like ChatGPT or a normal AI. And so what it's going to do is it's going to take the goal and it's actually going to break it into multiple subtasks. In this case, around the VIX, how to use the VIX to buy or short the market. It's going to analyze historical data, VIX data, to identify patterns and trends correlated with the market movements. It's going to develop a decision-making algorithm based on the VIX levels and trends to determine optimal buy and short opportunities. And then it's coming up with this crazy thing that we're not going to have enough tokens for it to actually work. It'll probably start looping, but it's going to continuously monitor the VIX index and execute trades according to the algorithm. So if you just let this thing keep running and you had all the tokens in the world and you had no loop limitations and you could actually go in and do input, it eventually would walk you through the steps of like how to even create like an algorithm, a trading algorithm that would trade the VIX. But for now, we're just going to go through this and see if it just gives me a basic trade strategy. Let me pull up the VIX. When I've got the VIX open, like how do I know when to buy and sell? Aside from what Sirmoth said, aside from this guy who took, what was it, 25 million to 520 million. How many of you guys want to do something like that? Yeah, I'm interested. I'm already like, this is something I want to see. I want to value and see if I could create my own strategy around this. Well, here's what it did. So let's go through this. Let's see if it gives me the same. It's going to be a little, the answers are always different, meaning like how it creates the answers, how it creates the tasks. But generally speaking, it just does such a good job giving us data and information. It says, after analyzing historical VIX data, I have identified certain patterns and trends that correlate with market movements. Here's a basic strategy to buy and short the market using the VIX. So without having to spend hours going and looking up, like I really thought I was smart, right? I heard this thing on a podcast. Here's this like almost billionaire. He might even be a billionaire, but it's like, here's this multi-millionaire, half a billionaire giving this little tip. And I'm like digging for it. And all I had to do was go in my AI and spend 60 seconds, right? So here is the basic strategy to buy and short the market using the VIX. Buy the market when the VIX is high and starts to decline. A high VIX usually indicates a high level of fear and uncertainty in the market. So it's like helping you understand the VIX. Great, thank you. It often comes with a downtrend in stock prices. When the VIX starts to decline, it would be a sign that the market sentiment is improving and stock prices may begin to recover. Consider buying the market during this time. Short the market when the VIX is low and starts to rise. A low VIX, so it's giving me all this information, really great, right? So we're seeing all this information. There's no guarantees, right? It's giving us our risk disclosure. Thank you. Let's see what else. So now it's going to refine based on that. It didn't really give me specifics, right? It didn't give me like values or percentages or like what should I maybe be focusing on more to buy and sell? But I haven't done anything. Maybe I went and got my coffee or my tea. I'm going to come back and we're going to see what it says. So it's still working on this. I'm just going to stop this. And because for the sake of time, I'm going to show you where it went. So what's really great about this is you can export this into an image, copy, PDF. You can blow it up. You can share it with your friends when you get done. I mean, this is really fun stuff, guys. Let me show you what it did. This is just going to blow your mind. Let's bring this up. All right, so here's what it did. So it went through all that. It gave us the first answer, very similar to the one before. And then look at what it does here. So same question, just look at the top. create a basic strategy around when to buy and short the market using the VIX. Any of you can do this, by the way. Test this on your own and then go onto your charts and pull up the S&P 500 and the VIX and see for yourself if this actually works, if what Sirmoth said to do actually really works when there's inflation. Analyze the VIX. First, monitor the VIX, which reflects the market expectation of volatility. Okay, we already know that. Buy the market when VIX is high. They already said that, but when? When the VIX is at relatively high levels, example 25 to 30. 25 to 30. What was it that Sirmoth said in that news article? It was around 30. It typically means that fear and uncertainty are dominating the market, which in turn could lead to overselling, right? Which in situations like this, it may be a good time to consider buying the market. See, we've got these tools that are just so simple. They're so easy to follow, but our human instinct and emotion actually wants to do the opposite because the news is yesterday's history, right? The news is something we react to. It's not, this isn't valuable information. So the opposite, notice here, it says right here, short the market when the VIX is low. Conversely, when the VIX has relatively low readings, example, below 15. And what did he say in the interview? In the teens. It suggests the market is complacent and there might be a lack of fear among investors. What happens when there's a lack of fear? Overbuying. Things get way oversold. People buy cars they don't need, right? It's what happened when all that funny money went out into the market. People buy a ton of stuff that they didn't need, homes that were way too big for them. And they just thought that life was going to keep going this direction forever. Welcome to the human experience, right? And then it just kept going, guys. It kept bringing up stuff. Threshold, low VIX threshold at 15, moderate 25, high VIX threshold 40. And then it just goes through a bunch of other levels, when to hold, when to be cautious to buy. I just loved this. This was like one of the greatest carrots and lessons I got from my own tool was to stop using the internet to do my research, especially when I'm trading. This would have saved me hours in research. And not to mention, I went and did the research on this over the last period of inflation. And if you had done this, just like Sirmoth said, the potential to make money was undeniable. And so here's my challenge for all our listeners, all the people who are like, look, I can tell things are moving, but I want to be on the winning side. I want to be part of this Trader Pulse podcast and this group of people who are gonna gear up, band arms together, and we're going to get through this and be stronger on the other side. Go see for yourself. Go see for yourself. Because the VIX, guys, it's just such a helpful tool during volatility. And right now we are going through some of the largest and most unique swings in volatility that we've had in probably decades. And now you have a tool to go test and back test to not be sideways on this thing, not be someone who's just in the sidelines putting your money into a CD, right? And maybe for some of you, that'd be an upgrade also. All right, guys. Well, my time is up, unfortunately. Excited as usual to be on here. We've had so much happen since Friday last week. I just want to make a last plug. If you got anything out of this or it was valuable to you, please hit the like and subscribe button and share with your friends. If you're getting value out of this and you're seeing like, hey, like we really are committed to help you guys and your friends and your family be like the underdogs as we go into this next recession, share this. I'm doing this for free. I get no benefit by doing this podcast exclusively other than me promoting GreenChart. And, if you like this, maybe you'll pay $40, $50 a month for a GreenChart. But honestly, there's enough here, and I want to bring enough value to this podcast that you don't even need that you won't even need that to make decisions for your future that potentially could change what the next or coming out of the next recession would look like for you and your family. So also put any comments in the section below if you guys have any questions or future podcasts or information you'd like me to cover. This is for you, the general public, to have the power and the leverage to make a difference in your financial future. So again, Matthew Pohl, Trader Pulse podcast, and we will see you Friday morning, 9 a.m. for our next full hour, where we'll do a recap of some of the stuff we talked about today and all the major events that happened throughout the week. Thanks a lot. So thanks a lot, you guys, and have a great evening. Thank you.